Hello there, this is FedBinaryOptions.com, and this is the Euro-US dollar. We are looking at this currency pair, trying to figure out where it's going to go based on the Elliott Wave theory, and we are favoring here both put and call options in this order. Now, are we going to see new lows when compared with these ones here? From my point of view, most likely not anytime soon, but as I'm favoring a contracting triangle to develop on the right side, with the move to the upside being only wave A of, let's say, out of this degree, something like this, wave A. Like this. Well, if this is wave A of the contracting triangle, then definitely we should expect a B wave to come in a corrective fashion as well. If you want, we had on the previous Friday the last breath of a rising wedge, the rising wedge being the one from here to here as a pattern, and we all know that in a rising wedge, by the time the 2 to 4 trend line is broken, and the 2 to 4 trend line has been broken here, then there is no way back for the whole pattern. However, I would say that the move or the leg of a contracting triangle that ended there started in here or from here, and therefore it must be a corrective wave. Well, if it ended there, then what kind of a degree will be the move prior to this triangle? Normally this would be the end of the third wave, so from all the way from the 1.40 level, this should be the third wave, let's say, of such of a degree. If this is the third wave that ends here, then we should look for a fourth wave in the end on the right side, but the fourth wave, I would say, it is going to be formed out of a contracting triangle. Now, if we are going to see a contracting triangle, then we got to look at the legs of a contracting triangle. Each leg of a a contracting triangle in a fourth wave as an independent structure must be a limiting one. So it should look something like A, B, C, D, E, before market moving lower. This is the triangular formation that we are looking for, and price is now only here, like this. So price, we are, let's say, it is somewhere in the middle. The thing to do, or what we need to do, is to mark the lows in the third wave, because this contracting triangle should end before breaking these lows. Now these lows are 106.65. Therefore we are favoring a move from the highs in here. If we take a Fibonacci and we measure the whole move from here to here into the other way around, so from here to here, we are favoring a move into the 61.8, but ideally to go and stretch beyond the 61.8. This level in here would be an area where we should go and look for call options, and from current levels we should still insist on the put options side. The B wave to come here again should not break these lows and the previous third wave, in the sense that you cannot have a double combination for wave A like it is here that ends with a wedge in right in the end, and you cannot have a complete retracement of a wave of the same degree. So with that being said, then the Euro-US dollar normally is going to go something like 75%. If you look at the Fibonacci retracement, and you note that the 50% retracement is right where price hesitated today, as today we had a move all the way into 1.1060 area. This is the minimum distance to be traveled for price in a contracting triangle, for the leg of a contracting triangle. At least 3 legs of the contracting triangle should go into the 50% retracement, but the B wave is favored not to be in 61.8, therefore lower value. Being on the 20th of May, I would go with 2 expiration dates. First of all, I would go with put options here with end of day and end of week and end of month. So number 1, put options with end of week basically on the 22nd of May at 17 GMT. And of course, still put options with end of month, that would be on the 29th of May, namely 1 week and 2 days from now, still at 17 GMT. And that would be on the bearish side. However, I really like the Euro US dollar in this area, in the sense that we are having a triangle that needs to have also a C wave and a D wave and so on and so forth. So by the time 1.09, let's say, comes, 1.09, 1.0850, I would like to go and trade call options, as we're looking then for a bounce all the way to the C wave in here. So number 3, if you want, or the third step, we should go for call options from 1.0880 area with, again, end of week expiration date. It doesn't matter when it comes, that area, if it comes, because it should be an area where markets should bounce. If it comes on Thursday, then we will buy with end of week expiration date, no matter what. Thank you very much for being here. This is fairbinaryoptions.com. Make sure you check our website and our Binary Options Academy as well, as we have a lot of interesting let's say projects there, and we talk including a contracting triangle. Have a great day and bye bye.